like to take just a couple of minutes and share with you our July edition of Evander Custom Income Note. And I'll remind you, there's a few reasons why we look at this type of investment. We feel that it helps provide predefined outcomes. It helps protect against losses with our buffers or our downside protection. It also helps to achieve a target level of income. We utilize this type of investment in an effort to receive monthly cash coupons or interest payments. Also, we feel that it helps improve your risk reward profile within your overall portfolio. And lastly, this type of investment, and this particular investment for July, is typically funded from the equity portion of an investor's portfolio. Allow me to take a couple of minutes. I will share my screen and walk you through the specific details for our July edition of Evander Custom Income Note. As I walk you through the July Custom Income Note, I'd like to point out a few things. We'll look at the underlying securities and why we've selected these particular investments or equities, stocks at this time, the maturity, how long this particular note or investment will last, our protection, which is our downside protection that's applied to both the principal barrier as well as the monthly coupon payments. And then lastly, what are those coupon payments? What are cash interest payments and opportunity for return? I'll remind you, this particular investment we feel falls somewhere between a stock and a bond on the risk return profile. So first of all, our underlying securities include Meta, Nvidia, and Netflix. This particular note will be issued by Morgan Stanley and has a 15-month duration. It will trade on July 25th. A couple of things when it comes to the underlying securities. I'd like to share with you why we've pulled and are tracking these three investments. And I'll remind you, we're not investing in these companies, but we're going to track where they're trading on July 25th and then on our observation dates each month, as well as at the 15-month maturity date. The first component is looking at the downside protection at maturity. It is 50%, meaning that's our barrier or our buffer for these three underlying securities. And on the 15-month mark, as long as all three of these underlying securities have held 50% of their value, then we will receive 100% of the principal or the initial investment amount. Now, sometimes people will ask, well, what if one of those underlying securities is down by more than 50%? That's our primary risk. For example, if Meta was to be trading 55% below its initial value or its value on July 25th, only on the maturity date, then in that case, we would receive 45% of the principal back. That's one of our primary risks. So we'll underwriting these to look at the probability of all three of the underlying securities trading at or above our barrier protection levels. Now, when it comes to our opportunity for return, our monthly coupon condition is 30%, meaning as long as all three of these underlying securities are trading at or have held 70% of their value on the monthly observation dates, the 25th, then we will receive a monthly cash coupon. When annualized, that monthly interest rate or that annualized interest rate is 18.7%. So a couple hypothetical scenarios on the 15-month mark, if all three of the underlying securities have held 50% of their value, or in other words, have not declined by more than 50%, then we will receive 100% of our principal back. So when we look at a $100,000 investment, we would receive $100,000 back as long as all three have held 50% of their value. I'll remind you, if one of them was trading at less or it was down by more than 50%, 52%, then we would receive 48% of the principal back. When it comes to the monthly cash coupon, on a $100,000 investment, we would anticipate and expect $1,558 paid in cash into your Bander supervised account. When annualized over the year, that would be $18,700. And as previously stated, if that barrier is breached at maturity, then some principal loss may occur. Now, we've looked at Morgan Stanley. They have good, stable outlooks. They are the one issuing this note. Essentially, they are the borrower. When looking at the three underlying securities, Meta, Nvidia, and Netflix, we want all three of them to be top holdings on the S&P 500. In this case, they're all top 30 holdings, which means they're 30 of the largest companies in the world. We feel that being a large cap company, that we have more probability of staying within our buffers. Also, we're looking at other funds in which these are held. The Dimensional U.S. High Profitability Fund, we like the filtering process for this fund. I'll share with you that here momentarily. The iShares U.S. Quality ETF looks at U.S. stocks with strong fundamentals. It's another fund that we like their filtering process. Meta is a part of the DUHP as well as the Qual iShares Fund. It also is included in the Dimensional U.S. Sustainability Fund. When it comes to NVIDIA, it also is a part of many of these funds. The Dimensional U.S. High Profitability, the iShares Quality Fund, as well as the Dimensional U.S. Sustainability Fund. And then lastly, Netflix, also included in the iShares Quality Fund, as well as the Dimensional U.S. Sustainability Fund. As part of this video, I'll include an attachment that shows some of the criteria for each of these funds. And then what we do is go look at those top holdings and then start to get bids back from the different banks or the issuers to see how we would like to underwrite our particular custom income note. And then one last thing that we like to see is that each of the underlying securities or holdings is at least a buy amongst analysts in their opinion. Not that we're investing directly in these funds, but we like to see what analysts are saying. And all of the underlying securities have buy ratings as of right now and then issuing of this note. As I mentioned, each of these underlying securities is a top holding on the S&P 500. The Dimensional U.S. Sustainability Fund offers broadly diversified total market exposure and aims to add value with the holdings within that fund. That's one of the things that we like about it. When it comes to the Dimensional U.S. Profitability Fund, they're looking at the largest 90% of stocks and then taking the highest 35% of those stocks based on their profitability. Those are the criteria in order to be a part of the U.S. Profitability Fund. And then lastly, with the MSCI U.S. Quality Factor ETF, they're looking at exposure to high quality U.S. stocks, companies that have low leverage or low debt and consistent earnings over time. And then also have shown to be resilient. So these are a few of their criteria. And what we've done is look for overlap with our underlying securities within these funds. This is a custom income note that will trade in models 4 and 5 as part of our actively managed portfolios here at Bander Wealth Management. If you have any questions about how this type of investment might impact you or your portfolio personally, please feel free to reach out to your wealth management team here at Bander. Thank you.